Hi, morning. Welcome back to my channel. Now, again, this channel is regarding financial and business topic. But again, today I'm going to tell you something very interesting. The ASEAN property market performance in the last 10 years. So if you ask yourself this question, is Singapore the only real estate market that's going up for the whole ASEAN members country or among them? Do you think which would be the answer? Are you right? Or is Singapore the only winner? Sorry, the answer is no. Singapore is not the only winner. Indeed, even though Singapore put up a legendary 85% increase in houses prices over the last 10 years, Vietnam and other ASEAN members actually completely stole the show with an explosive, mind-melting 200% gain in the price of condominiums. Now, this is about an economy that become the world largest or the second world largest manufacturing base for many MNC. Now, meanwhile, other members countries like Thailand, Cambodia face massive sector-specific corrections due to a dramatic collapse in Chinese buyer. So it turns out ASEAN property isn't just a single story. It is a chaotic, multi-layer, multiplayer game where some sectors will hit the jackpot and others completely go the other way. So if you want to know which market will be the next to look at, this video will give you some of the historical picture for you to make some good decision. Now let's look at slide number 2. Let's look at the gold standard of the whole real estate engineering in the ASEAN region. Now if you look at Singapore property market, Singapore property market isn't just a market. It is a policy control matrix managed by the puppet masters at the Urban Redevelopment Authority, which is under the instruction of the government. Now, look at all the resilience here. Now, when COVID-19 hit in 2020, most global markets panicked, but Singapore merely yawned and posted a 2.2% private residential price increase, followed by a roaming 10% increase in the year 2021. How does the government handle this? Or how are they going to manage to ensure that the property market is not overheated? So in April 2023, they actually raised the additional buyer stamp duty for foreign buyers to an eye-watering 60%. Yes, 60%. Imagine if you want to buy a 10 million luxury condo in Singapore, you got to hand over to the government 6 million just for all the paperwork. So this is how Singapore government are closely they are closely watching the property industry to make sure that there is no bubble being formed. Now, let's look further into Singapore property, which is by segment, and over the 10 years, what were the cumulative changes among all the segment of all the property market in Singapore. Let's look at the playground of the billionaires. If you look at this slide, Singapore property price by segment and 10 years cumulative change from 2015 to 2025. Now, if you want to see the pure asset scarcity at work, then this is it. We have to talk about the legendary good class bungalows. Now, this class of real estate, actually, the prices increased by over 133% over the decade, moving from about dollar 1,005 per square foot to over 3,500 in the year 2025. Now, there must be some fun facts somewhere in the market. You see, you can't even buy one unless you are a Singapore citizen. You can't buy one landed property in Singapore unless you are a downright Singapore citizen, and making this class of residential property the most luxury segment. But on the flip side, you notice that there's some structural victim of the decade. Where are they? They are in the prime retail area in Orchard Road, actually. So you look at the prime retail rents on Orchard Road, they actually dropped by 3.6% over the last 10 years. Or if you adjusted using inflation, then the drop is about minus 15%. Why is this so? Of course, I think the answer is obvious, because of the e-commerce and a post-COVID shift towards digital shopping, which is the new king right now for consumer. So now, even in paradise as Singapore, picking the wrong asset class means losing money. Hold on to your seatbelt, tighten your seatbelt, because we are now going into the next slide, which I will show you what the Vietnam property market performance in the past. Now, if you look at the most explosive real estate roller coaster of the century, then Vietnam it is. The next slide is Vietnam property price performance, the annual changes by type of property for the last 10 years. Now, if you deploy your capital in Ho Chi Minh City back in the year 2015, then you aren't an investor, you are actually a prophet. Now look at this number. The GDP growth of Vietnam consistently hammered out around 6% to 8% year after year for the last 10 years. But it wasn't all sunshine, of course. Now in the year 2022 and 2023, the Vietnamese government launched an aggressive crackdown on corporate bond fraud and arrested the largest billionaire developer in the largest banking scandal in Vietnamese history. The market frozen and the real apartment prices actually slipped into a negative territory in 2023. But like a financial phoenix, the market rolled back in 2024 with secondary condo prices in Hanoi leaping an unbelievable up 26% in a single year. Now, welcome to the frontier investment at the finest. This is Vietnam high drama, high volatility, and insane gains. Now, the next slide, which is Vietnam property, the key benchmark by city and type for the last 10 years will give you further answer into this exciting market. Now, in the year 2015, an average apartment in Ho Chi Minh City cost around US 1,100 per square meter. Now, by 2025, what happened? Now, it actually skyrocketed to 3,200 per square meter. This is a nominal surge of about close to 190%. But the real winner isn't residential housing. If you look at the industrial land in some of the provinces in Vietnam, the price increase is actually over 200%. Why is this so? This is because of the China Plus One strategy. And the Plus One is exactly in Vietnam, whereby Vietnam is becoming the second largest manufacturing hub in the world. And you can see global tech giant like Samsung, Intel moving factory to Vietnam just to escape some geopolitical crossfire. So Vietnam transformed herself from an agricultural economy into the world electronic factory right before our eyes, turning early land investor into multi-millionaire. Now, let's go further and see the rest of the ASEAN member country. Do they have the similar fate? Okay, now let's move on because there are quite a lot of members country to cover in ASEAN. So we have talked about Vietnam. Now let's move on to Malaysia. Now, Malaysia, we are talking about a decade of hangover because of oversupply. If you look at the next slide, Malaysia property price performance, annual changes from 2015 to 2025. Now, to understand Malaysia, you need to know that from 2005 to 2015, the previous 10 years, actually house prices went on an absolute blender, doubling in value. So because of that, in the last 10 years, they have been spent nursing the mother of all hangovers. Why? Because the market has been wrestling with a massive residential overhang, a polite real estate term for completed houses but nobody can afford or wants to buy. By the early 2025, Malaysia had over 23,515 unsold homes, valued at around ringgit 15 billion. So these are the leftover or empty houses that is still occupying in the market. So the price growth have no choice but crawl at a sluggish 1% to 2% over the last 10 years. However, things start to pick up in 2024 with some recovery thanks to the government Mandani economy initiative. But it is a classic reminder that building too much luxury high-rise houses can actually freeze a market for a decade. So this slide, let's slice open the regional the data for Malaysia and look at this slide. Malaysia property from the year 2015 to 2025, the price levels by different type of property and location. Now this slide actually highlights a brutal story of two assets. If you bought a high-rise condo in Kuala Lumpur or Johor Bahru over the last 10 years, you took a real inflation-adjusted arrangement, then the KL condos only saw a nominal gain of just 6.7%. But if you adjusted for inflation, this means a negative 10% loss in real value. Likewise, for Johor condo, they actually dropped a nominal percentage of 7.9%. But wait, not all property classes in Malaysia are having the same fate. So we don't write off Malaysia just yet. If we look at the industrial sector, just at some other country like in Philippines, Johor industry land values actually rocketed up by almost 67% in the last 10 years. Why? The massive Johor Singapore Special Economic Zone catalyst actually turned southern Malaysia into a magnet for massive data centers escaping from Singapore land constraint. So landed residential houses in Malaysia also held their value quite decently. So the lesson here for Malaysia, now location and asset type are everything. So when you look at Malaysia property, you have to select the right asset classes. Now, after we talk about Malaysia, the next one will be Thailand. Thailand is a market with a massive split personality. Now, if you look at the slide, Thailand property price performance annual changes by type for the year 2015 to 2025. Now, for years, Bangkok's skyline was built on a single bet that wealthy Chinese buyer would keep pouring in money forever to buy luxury condos. But then came COVID-19 and the shifting capital controls, and that bet collapsed completely. By late 2024, Thailand was sitting on a mountain of 87,000 unsold condominium units nationwide. So absorption rate fell off the cliff and condo prices dropped consistently. But while residential was crying, industrial real estate in the Eastern Economic Corridor of Thailand was having an absolute party, throwing up consecutively growth years of about 12%, 17%, and 70% for the last few years. Now, Thailand became an absolute powerhouse for electric vehicle manufacturing, saving the property market from a total meltdown. So if you look at the next slide, which is still regarding Thailand property 2015 versus 2025 price benchmark. Now, just for example, if you bought a prime CBD condo in Bangkok in 2015, your asset actually shrunk nominally by 5.3% 10 years later, which translates to a painful minus 25% loss in real purchasing power. Now, commercial offices face even worse, with Grade A office rents dropping 12% due to massive oversupply and hybrid work trends, and also work from home kind of a trend. But check out the champion. So again, likewise, the industrial land in the Eastern Economic Corridor skyrocketed from 3.5 million baht to up to 9 million baht, which is a mind-boggling nominal surge of up to 157%. So Thailand real estate wealth completely relocated from the luxury penthouses of Bangkok to the dirty industrial battery churning factory floors of all the industrial towns in the eastern side of Thailand. The largest economy in ASEAN, which is the Indonesia. Now, look at the slide, this slide, which is Indonesia property price performance annual changes from the year 2015 to 2025. Now, Indonesia property is a slow, steady giant. According to Bank International Residential Index, price actually crawl upward at a sleepy 1% to 2% annually for the later half of the last decade. Now, why so slow? Because Jakarta premium condo market has been completely saturated, and office markets took a severe negative 8% beating during COVID-19. But beneath the boring surface lies a massive commodity and electric vehicle manufacturing boom, thanks to Indonesia's aggressive downstreaming mandates forcing companies to refine nickel domestically rather than exporting it raw. So the industrial land prices in Java and some of the industrial belts surged by 12% in 2024 alone. Now, it is really a textbook example of how government natural resource policy can quietly mint real estate millionaire. But if you look at from the next slide, if you want to find the reaction in Indonesia, then the next slide, which is titled Indonesia Property Prices by Type and City for the last 10 years, will give you some idea. Now, while Jakarta CBD condos lost ground about 8% to 12% US dollar term due to oversupply and currency depreciation, there are two bright spots in Indonesia. Number one will be Bali. Now, thanks to the post-pandemic digital nomad explosion, now, villa prices in Bali actually surged by a mind-boggling 100 to 200% in US term. TikToker, all the online platform creator and crypto traders actually literally bought up the island. Now, second look, if you look at the new capital of Indonesia, they are actually building from scratch a new capital city in East Kalimantan. So the land values there are surging from a baseline of practically zero as government infrastructure flows in. Now, it's a wow reminder that when a country decides to move its entire capital city, you better buy the land surrounding it. We move on to Philippines. Now, the Philippines is easily one of the most resilient and dramatic survivors stories of the decade. As you can see from the next slide, Philippines property price performance annual changes from the year 2015 to 2025. Now, before the pandemic, Manila was actually enjoying an absolute real estate fiesta, with residential prices growing by 8 to 9% annually. Why? Because of POGOs. Now, what does POGO stand for? It stands for Philippine Offshore Gaming Operators. Now, these online gaming companies actually rented the entire skyscraper clusters and filled luxury condos with thousands of expatriate workers. But in the year 2024, the government suddenly dropped a nuclear bomb on this sector, announcing a total ban on POGO. So all these operators cannot operate anymore. So immediately condominium price growth flattened instantly to just about 1.5% year on year. But yet the broader market refused to die because of a rock-solid domestic banking system and diversified corporates growth. So as a result, Philippines managed to avoid a total crash in the property market. Now, for Philippine market is a little bit different. So maybe the next slide, I will guide you why there are some differences compared to other ASEAN market. Now, let's check the financial armor of the Philippines real estate market in this slide, which is titled Philippines Property Price Level from 2015 to against 2025. Now, even with the POGO, meaning the online gaming operation, was totally banned, the premium corporate, in some premium corporate hubs, we actually saw condo prices climb from 3,200 US to 5,200 US per square meter. This is a massive 62.5% increase. Now, why and how did they sustain this? The answer is actually a true story of an economic superpower, the OFWs. What does OFW stand for? It stands for Overseas Filipino Workers. Now, every single year, millions of Filipino working in the US, in the Europe, in the Middle East, pump an incredible 34 billion to 38 billion US in cash remittances back home. What do their families buy first? Landed houses in master plan subdivisions, pushing Greater Manila house values up by 75% over the last decade. Now, this inflow of money is inelastic, unbreakable shield of capital. So when you look at Philippines, you must always remember that the Philippine market is slightly different from the rest of the ASEAN members. Now, how about Cambodia, a very unique country among the ASEAN members country? Now, welcome to the most terrifying stories in the Southeast Asia history. Now, if you look at this slide, Cambodia property price performance, the annual changes from 2015 to 2025. Now, actually, between the year 2016 and 2018, Cambodia actually has an absolute wonderful property time, and they actually posting a 15% to 12% annual year-on-year gain in real estate prices. Now, money was flying into Phnom Penh and the coastal town of Cambodia as Chinese developer threw up casino-backed high-rises at record speeds. Then the music stopped. Online gambling was banned in the year 2019. COVID-19 hit, and the Chinese buyer base vanished overnight because of capital control in China. The result? Absolute devastation. According to the National Bank of Cambodia, residential prices entered a brutal 29-month consecutive decline all the way up to early 2026. And the monthly decline is about 4.52% year on year. So for this, we can see that this is a very stark, painful reminder of what happens when a market relies completely on foreign speculation instead of real domestic demand. Now, the next slide, we have to talk about Myanmar. So the Myanmar property price performance annual changes from the year 2015 to 2025. Now, we are looking at the market now impacted not by interest rate or supply cycle, but totally by raw political trauma. drama. So you see, if you look at this table, this slide, back in 2015, Yangon was actually one of the hottest frontiers market in Asia, growing at 6% annually as democracy took root and foreign capital flooded in. But unfortunately, on February the 1st, 2021, military took over the country and international business fled. So sanctions returns and the Myanmar currency collapsed, losing about 40% of its value against US dollar just in the year 2024 alone. So in Yangon, all the prime residential and commercial values crashed by about between 25% to 35% in US dollar term. The only bright spot will be the new capital, Mandala. So again, you can look at the slide. So in short, it's a tragic reminder that without political stability, real estate in any country is just a pile of brick and dust. Now, we have very two small markets in ASEAN. So that is Laos and Brunei. So I'm combining these two into one slide. So now let's look at this, actually consider the two quietest corners of the ASEAN real estate. If you look at this slide, Laos and Brunei property market summary for the year 2015 to 2025. Now, this is a very fascinating story or study of polar opposites. Now, Laos is a high-risk frontier market, of course. I think on one hand, the completion of the massive Laos-China railway in the year 2021 actually increased the land values along its strait or corridor. On the other hand, the local currency, the KIP, actually collapsed by over 40% against the US dollar. So meaning foreign investors who make profits in local currency actually lost 30% when converting back to dollars. Now, meanwhile, for Brunei is the exact opposite. Now, this is the ultra-stable petrol state. The government literally hands out heavily subsidized housing to its small population, so keeping private market price movements locked between a boring volatility of a single-digit percentage over the entire decade. The next slide actually put everything together. So if you look at the next slide, ASEAN residential property cumulative 10 years price change by type for in nominal term from the year 2015 to 2025. Now, if you look at all these markets that being put side by side, the data will show you something that you had never thought of. Now, Vietnam stands as the undisputed champion of explosive wealth creation, printing legendary nominal gains of about up to 250% over the last 10 years in apartments. Now, Singapore is the undisputed master of balanced stability, seeing landed prices climb about 77% without a year of correction during the last 10 years. Now, meanwhile, let's look at Malaysia and Indonesia. Their landed families' houses grew beautifully by close to 60% over the last 10 years, but their condo market flattened or entered some real-term declines. The data proved that you can't just buy ASEAN property as a whole. You had to pick the exact asset class DNA. Now, this slide, actually, I again put everything together to do a summary scorecard. If you look at this slide, ASEAN property 10 years performance summary scorecard. Now, this one from here, you can actually see that the Singapore finishes at the top with an incredible 9.5 point out of 10 overall score. Now, crowned as the best managed and safest market. Number two, if you look at Vietnam takes a close second with a rolling 9 out of 10, walking away as the explosive nominal growth king over the last 10 years. On the opposite end, Myanmar finishes with a tragic 1 out of 10 due to severe political crisis and currency collapse, while Cambodia managed to achieve 3.5 out of 10 due to its severe condominium bust. Now, the absolute best investment types of the decade, it will be landed residential properties and industrial factory land. Now, so this will give you an overall picture about the health, past performance of ASEAN property in the last 10 years. Now, for the last slide, we're coming to the end of the present of this video. So for the last slide, I actually put up everything together in one slide so that you can see the size of the total real market, valuation in US dollar. You can also, and I'll just break down into residential, commercial, and the year-on-year growth, and also some of the forecasts, which I can't guarantee the accuracy, but again, this is all from available market sources that I simply put them together. So this is for your information. If you want to capture this screen for your client, by all means. So again, I hope that this video will give you some valuable insight or some information regarding ASEAN property performance as a whole in the last 10 years. Okay, thank you viewer for watching my video. Thank you very much. Video production is never easy, so please do help me to subscribe and also forward this video if you find useful to your friends. So again, thank you very much and I will see you next video. Thank you. Bye.